Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Hope everybody had a great weekend. Today we're going to talk a little bit about Tesla stock. We've got a couple of articles that may have affected the performance today. We've got more news on that Plaid Model S fire last week, a couple of updates from Elon Musk on full self-driving and a couple other topics, analyst reactions to Tesla's delivery and production report last week, and a few other items as well. So first up on Tesla stock, following the relatively muted performance on Friday after the delivery and production report, Tesla today definitely underperforming, finishing down 2.9% to $659.58. That compared to the NASDAQ, which was up and down but finished up about 0.2% today. Despite the long holiday weekend, it did end up being a relatively quiet period for Tesla news over the last few days. Most of the attention that I've seen seemed to be focused around a couple of articles, one from New York Times, one from Bloomberg. We'll start with the New York Times article. The headline here reads, Tesla says Autopilot makes its cars safer, crash victims say it kills. This is sort of an expose-style article about an unfortunate accident involving a Tesla on Autopilot back in August of 2019, so a couple years ago, in which a vehicle in the process of changing lanes was rear-ended by a Tesla that was on Autopilot. The collision caused the vehicle getting rear-ended to roll over, and unfortunately there was a passenger in the front seat not wearing a seatbelt, 15-year-old boy, who was thrown from the vehicle and sadly did not survive the crash. So the family is now suing Tesla, claiming that Autopilot was partially responsible for this accident. The lawyers for the video did obtain the dashcam footage from Tesla. It's not gruesome or anything, but just because of the circumstances of the accident, I won't play it here, but you can find it in that New York Times article if you do want to see it. It does look like a pretty run-of-the-mill lane change that Autopilot would generally handle, so you do have to empathize a little bit with the driver of the Tesla, but this does serve as a grim reminder that Autopilot is not perfect. It is still an assist feature. And as Tesla alerts you when you activate Autopilot, and as I hope we're all aware, ultimately the responsibility is still on the driver. As I said, this was a couple of years ago. Autopilot surely has improved over that time, but it is important to stay diligent when on Autopilot. And again, on the other side of things, another harrowing reminder of the importance of wearing seatbelts and making sure your passengers are as well. Even when level 4 or level 5 autonomy comes, there are still going to be accidents, so diminishing the damage from those accidents as much as possible is still important. Anyway, very sad situation for all involved. Certainly empathize with those people. From a business or investor point of view, I personally wouldn't expect liability there for Tesla because, again, the driver is ultimately responsible. But anecdotal or not, media does have an influence. That can affect how a brand is perceived, that can affect regulations and how they're structured. And those are pretty important things for Tesla long term. So I think on the pro PR or pro advertising side, it's really just people looking for Tesla to have a more active role in shaping some of those things. Sort of related to that idea was the other article that I mentioned here that seemed to get a lot of attention this weekend, this one from Bloomberg. The headline here reading, Tesla's fall from grace in China shows perils of betting on Beijing. The article starts off with a relatively recent owner of a Tesla Model 3 in China they purchased late last year. And this year in May, they sold their Model 3, primarily due to the narrative that had been forming on social media. He said, quote, it's out of safety concerns. Reading about it every day, I've been afraid of driving, end quote. Talking about the brake failure FUD that we've spent a lot of time discussing, that, by the way, there is still no evidence of. A lot of the rest of the article just details some of the problems that we've been talking about, but they do have a little bit of new information here. Writing, quote, previously focused on state-run media, Tesla is now trying to build relationships with auto industry publications and influencers on platforms such as Weibo and WeChat, for example by inviting them on factory tours and conducting group discussion sessions with policymakers, consumers, and media outlets. According to people familiar with the matter, it's also complained to the government over what it sees as unwarranted attacks on social media and asked Beijing to use its censorship powers to block some of the posts, end quote. So there is Tesla taking a more active role in some of those things. We've also seen a lot of job postings for communications-related positions in China, which I do think is a positive, but I think it's also a sign that this has had an impact on Tesla's business to some extent in China. The important thing to understand is whether or not this will have a long-term impact, or if Tesla will be able to work through it. Personally, I believe the latter, and oftentimes challenges like this can make a company even stronger. The other detail that I found interesting in this article was set up by the author saying that one possibility is that there are maybe dissenting opinions throughout the Chinese government on Tesla and its role. They say, quote, in late May, according to two people familiar with the situation, China's Ministry of Commerce and the government of Shanghai, where Tesla is a significant source of employment and cachet, held meetings with the company to emphasize their continued support for its expansion, end quote. So perhaps the Ministry of Commerce and the government of Shanghai more supportive, other areas less supportive, but at least a report here confirming some sort of government support. Nevertheless, the entire article doesn't necessarily read positive for Tesla, more mixed. Certainly not a positive headline, and probably not helping out Tesla stock today, especially because yesterday, Chinese ride-sharing company Didi, which was actually just listed on the New York Stock Exchange a few days ago, has been ordered to have its app removed from mobile app stores in China due to the government investigating their handling of customer data. So Didi stock down about 20% today. They also announced investigations into a couple other US-listed Chinese companies, and with all of the uncertainty surrounding Tesla in China right now, some of that certainly could have been a factor on Tesla stock today as well. We will look at a couple other things on the stock. We do have analyst reactions to the delivery and production report, but for now, let's pause on that, move on to some tweets from Elon Musk over the weekend. First up here, another update on the timing for FSD version 9. Elon replying to Black Model 3 on Twitter, who shared a photo of his car being renamed to 2 weeks, poking a bit of fun at Elon's perpetual 2-week timeline. Elon replying saying, quote, "Haha, FSD 9 beta is shipping soon, I swear. Generalized self-driving is a hard problem as it requires solving a large part of real-world AI. Didn't expect it to be so hard, but the difficulty is obvious. In retrospect, nothing has more degrees of freedom than reality." End quote. So maybe a lot of people would think, well, duh, we could have told you that it would be harder than you think. Software that's not even revolutionary is challenging enough. But hey, starting Tesla and starting SpaceX, both also things that I think Elon probably underestimated the difficulty of, but over time have worked out. Hopefully we'll look back on FSD someday being sort of the same. In a really weird way, maybe that's part of what makes Elon Musk so successful, his willingness to go after those things that others might not even try to do. Anyway, even before this tweet, Elon also demonstrating some self-awareness about those timelines, responding to Tesla owner Silicon Valley asking when SpaceX is sending the first crew to Mars, Elon replying to that saying 2 weeks. So hopefully Elon joking around a little bit about these timelines is a good sign that maybe FSD Beta 9 is closer, but we'll just have to wait and see. Couple of other interesting details here. Elon replying to a tweet asking about the software in the Plaid Model S and if we'd see an updated UI for the Model 3 and the Model Y. Elon saying, quote, "Yes, updated UI coming with FSD wide release. All cars with FSD computer will have new Mind of Car view. All 3/Y can be upgraded to have FSD computer." End quote. So first, I saw some people getting confused about Elon saying all 3/Y can be updated to have FSD computer. Obviously, all Model Ys already have hardware 3, so don't read into that. Elon just grouping them together in my view, because that's how the question was phrased, 3/Y. If he had excluded the Y there, maybe there would have been questions about why he was being so specific about the Model 3. Anyway, nice to have confirmation about a new UI for the 3 and the Y, presumably very similar to what we've seen in the Plaid. And as for the Mind of Car view that he mentions there, I would imagine that would be pretty similar to what we've seen on the FSD betas. More refined, I'm sure, but just showing everything that the car is seeing that's relevant. Another user here on Twitter also asking when Autopilot would be able to recognize digital variable speed signs. Elon replying saying that the error is caused by, quote, "switching frequency of light source, surround video, multiple cameras across several frames, improving frames per second, and exposure setting tweaks solves this. All in FSD build," end quote. Obviously, most of the focus on FSD version 9 has sort of been the city streets functionality and the shift over to vision only. It's kind of nice to hear about some of these other things that maybe aren't showstoppers but are also still important that Tesla is maybe solving in the same iteration. Hopefully a lot of little things like that add up to a much improved experience. Next here, just a little bit of an update on the Cybertruck. Elon replying to Tesla owners online, tweeting about wanting an update on the Cybertruck. Elon saying, quote, "Friday afternoons are usually Tesla design studio time. Cybertruck will be almost exactly what was shown. We're adding rear wheel steering so it can do tight turns and maneuver with high agility. A lot of other great things coming," end quote. Lastly then here from Elon's Twitter is an update on passenger profiles. Tesla owner Silicon Valley asking about the potential of that. Elon saying, quote, "Yes, long-term all settings will be in your Tesla app and car will auto-adjust," end quote. So theoretically, with that, anybody with a Tesla app could save their desired settings. They would know if you're driving or you're the passenger and set things accordingly. All right, next up is a bit of an update on the sort of strange Plaid Model S fire that we had last week. The New York Post is reporting that the owner, previously unidentified, is Bart Smith, who is the head of the digital asset group at Susquehanna International. Susquehanna in total has over $600 billion in assets under management. So pretty interesting that this person works at an investment firm. Also interesting that they work in the crypto area of that investment firm. Certainly opinions on Elon Musk in that space have been contentious recently. And while this wouldn't be in Bart Smith's area specifically, Susquehanna does actually have a position in Tesla which we're not able to determine whether or not it is a net long position or a net short position because it is in options, or at least a portion of it is in options. So if we look at their most recent 13F filing, you can see a number of different Tesla positions there, some in shares, but then some there also denote being put or call positions. Now, you may remember back when we looked at Michael Burry's 13F filing that was widely misreported on, we're not able to tell specifically what put options they have or what call options they have, just the underlying amount of shares that those options would control, from which we really can't determine very much. And remember, the filing here is just at one point in time. Certainly they could change their position in between quarters. So some of the ties here certainly are interesting. I'll leave it at that for now until we do get more details, but there do seem to be a lot of unusual elements about this case. Next here, just a few analyst reactions to Tesla's delivery and production report that we've been seeing mostly today. So first here is from JP Morgan, and I just have to lead with this one. They've increased their price target from $155 all the way up to $160 because of a Q2 delivery beat. Unsurprisingly, they remain underweight on the stock. Goldman Sachs today also chiming in. They have reiterated their buy rating and $860 price target. Analyst Mark Delaney noting that Tesla essentially met expectations in terms of what the Wall Street consensus was, but he actually believes that they met or slightly exceeded due to some of the concerns around China. Delaney is leaving his 875,000 vehicle forecast for the year unchanged. The last one I've got here is from Morgan Stanley. They have reiterated their price target of $900, their overweight stock rating, but they do note that they've been fielding a number of questions from Tesla investors about the implications of the DD news that we had talked about earlier, and how relevant it may or may not be to Tesla. Now, we've talked in the past about Morgan Stanley's view on Tesla in China. They're not super bullish, which I think pretty much sums up their answers to any concerns around this. Just noting that the prospect of a US-based company controlling a ride-sharing fleet potentially in China is not really something they expect to happen. Of course, they do still have that $900 price target, so they're just more bullish in other areas of the company. I think the most important point, though, just investors continuing to have that concern, and I do think that continues to weigh on the stock. I certainly believe the China situation is weighing much more on the stock than anything to do with Bitcoin. All right, last couple of stories here. First, we have news on the latest merger in the automotive space. This is going to be between Bugatti and Rimac. So this is always a little bit confusing, but Volkswagen Group and Porsche will be creating a joint venture combining Rimac and Bugatti. Bugatti is part of the Volkswagen Group, as is Porsche, and Porsche actually has a stake in Rimac. So it's not like these were super separate entities in the past, but they'll now be tied up under Bugatti Rimac. Lastly here then, also Volkswagen related, Reuters is reporting that Volkswagen is looking to sell its stake in the Electrify America charging network, apparently looking for funds to build infrastructure for EVs, which I think is already Electrify America's intent. So this is a confusing story to me. I'll need to do a little bit more research on it because I thought one of the premises of Electrify America was sort of a penalty for the emission scandal, so I didn't realize they could divest from that. I know there were other penalties as well, but we'll have to come back to that because I don't know. It's a confusing one to me. Wanted to at least pass it along for now though, but that will wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Wednesday, July 7th episode of Tesla Daily. Thank you.